its return. This is the general trend of the income tax heading. Now, from gross total income, the deductions are deducted. Section 14A says that the expenses incurred to earn the exempt income are not deductible. For example, any expenditure earned in connection with the agricultural income is not deductible from your gross total income. So this is the scenario of headwise income. As I have said, that anyone is required to pay the tax on total income. Besides this, there is another system of payment of taxes. We know it as presumptive income. Just to facilitate the small taxpayers, the government has decided to launch another system to pay the tax, that is on presumptive basis. There are only three sections in the entire Income Tax Act. On the basis of these three sections, the presumptive income is calculated. So first section is 44 AD. 44 AD says that if any person having income from business or profession whose gross receipts are up to 2 crores, and if that person estimates his income 8% or above 8%, he may file its return under section 44 AD on presumptive basis. On 2 crore of sales, he is not required to get its accounts audited. This is another benefit, because if the sales are higher than 1 crore, he is required to get its accounts audited. But here in this case, section 44 AD says that if a person has sales up to 2 crores, he is not required to get its accounts audited. There is another proviso. And if the total receipts, out of total receipts, 95% receipts are by way of check or draft or through bank, then instead of calculating the tax at the rate of 8%, that person is required only to calculate the tax at the rate of 6%. There is a benefit of 2% of the tax of the income. Besides that, the total turnover is also relaxed and it is up to 3 crores. So if the total sales, out of total sales, 95% sales are through bank, then the limit is 3 crores. Up to 3 crores, he is not required to get its account audited, and instead of 8%, he is required to calculate its tax only at the rate of 6%. Now another section is 44 ADA. This is in connection with professionals. It was in connection with the business. Now this is in connection with profession. Any professional having receipts below 50 lakhs, then that professional is required to pay tax at the rate of 50% on presumptive basis. Besides this, here also, if the 95% of the total receipts are by way of bank deposits or through bank, then the limit is 75 lakhs. Up to 75 lakhs, he is not required to get its accounts audited. So this is in case of professionals. Then another section is there, section 44 AE. It is in connection with transporters. I think no one shall be interested to know this, or should I tell?
I don't think transportation and all this is needed.
Is needed, I think. But in short, I'm just
Yes.
telling you, for transporters, if a transporter has goods carriage less than 10 in numbers, he is entitled for this benefit. And there are two categories, heavy vehicle and small vehicles. So that is separate issue, and that is not very much required here. Now, this is the scenario as far as payment of taxes is concerned, computation of income is concerned. Now, I'm just telling you the basic difference between old law and new law, which is going to be implemented with effect from 1st of April 2026. There were 298 sections in old law. Now the new law, it has 536 sections. Basically, it seems that the new law has much higher number of sections than the old law, but this is not the case. In reality, in old law, there were so many sections having a large number of subsections. As for example, I am telling you section 115. Section 115 and between section 116, there are 109 other sections like 115A, 115AA, 115 AAA, 115 AAB, 115 AAD. Like that, there are 109 sections. In the same manner, section 80, it has 76 sections between 80 and 81. Section 80, 80A, 80B, 80C, 80D, 80E, 80F. There are as many as 76 sections. Then, like section 194, TDS, there are as many as 35 sections between section 194 to 195. Like section 194A, 194B, 194C, TDS. These are all related with TDS, and you must be aware of that. The section 194A, TDS, or other than securities, like that. Then my submission is the number of sections have been increased, but in fact, the total number and subsections, if we look, then it is very much lesser in number than in old act. Next, the old act has 900 explanations at present, but the new act has no explanation, and every explanation has been adjusted in the form of subsections. Old act has 1200 provisos, but the new act has no proviso. Basically, proviso is an exception to the main section. For example, if we say a gift received in excess of rupees 50,000 is taxable, provided that if it is received from a relative, it is not taxable. So provided that if it is received from a relative, it is an exception to the main section. So Purane, in old law, there were as many as 1200 proviso, but in new act, there is no proviso. Like that, there are 252 notwithstanding, but there is no notwithstanding in the new act, and only irrespective of has been used. The main
Then
change,
I think then I think that
yeah,
new regime is more beneficial and easier than old.
basically, I am telling you, there is no difference between new regime and old regime. All the policies are the same. All the criteria of the sections, basics of the sections are the same. Only there is a change of language, because
Okay.
the proviso, notwithstanding, explanation. Basically, this is the British pattern, which have been followed in
Okay.
which was originally promulgated in 1922, and it was followed in 1961. But in this act, this procedure has been abolished.
Okay.
And instead of proviso, subsection has been introduced in that section itself. So this is the main difference between old act and new act, and in very short, I have explained the difference between the new act and old act. Now, Rashmi Bhabi, as you told me, I am supposed to explain the difference between old and new regime. This is a very hot topic.
I think you have covered it.
Yeah. So I want to explain what is old regime, what is new regime, what are the benefits on new regime.
Yes, please explain what are the benefits of new regime.
I'm telling you. Basically, there are three differences between old regime and new regime. The first difference is regarding the tax slab. Tax slabs are different in old regime and new regime. Second difference is regarding deductions. There are so many deductions available in old regime, but these deductions are inadmissible under the new regime. Then the basic exemption and rebate under section 87A. This is the main difference which makes the new regime attractive in comparison to old regime. So first I will discuss the difference of tax slab. Under tax slab in new regime, there is no difference between general and senior citizen. Tax slab is same for general category, matlab the taxpayers below 60 years of age, or the persons or taxpayers above 60 years of age are at par. There is no difference between these two. The slab is up to 4 lakhs, it is nil. Above 4 lakhs and up to 8 lakhs, it is 5%. Above 8 lakhs, up to 12 lakhs, it is 10%. 12 to 16 lakhs, it is 15%. 16 to 20 lakhs, it is 20%. 20 to 24 lakhs, it is 25%. And after 24 lakhs, it is 30%. This is the slab rates prescribed under the new regime. Under the old regime, the difference is, first of all, I am telling the slab rate for taxpayers below 60 years of age. For general category, up to 2.5 lakhs, it is exempt. 2.5 lakhs to 5 lakhs, it is 5%. 5 lakhs to 10 lakhs, it is 20%. And above 10 lakhs, it is 30%. In new regime, we attained the 30% slab rate at the slab of 24 lakhs. But in old regime, after 10 lakhs, the tax slab at the rate of 30% is applicable.
Oh.
This is the basic difference I am telling you. Then the persons, the taxpayers above 60 years of age, for that 3 lakhs is the basic exemption instead of 2.5 lakhs. If a senior citizen opts old regime, he is entitled to claim the basic exemption up to 3 lakhs. Then 3 lakhs to 5 lakhs, it is 5%. Then 5 lakhs to 10 lakhs, 20%. And after 10 lakhs, it is 30%. So this is the difference between old regime and new regime tax slab wise.
Okay.
Basic difference is higher rate of tax, which is applicable. 30% is the highest rate of tax. In new regime, it is applicable at 24 lakhs or more. But it is under old regime, it is applicable even on 10 lakhs. So this is, it makes a very vast difference in tax payable in both the regimes. Then the deductions under chapter 6A, rather, I would like to say chapter 6A, like section 80C, 80E, all the deductions, these deductions are not applicable in new regime. These all deductions are applicable in old regime. Besides that, the interest paid on home loan, that is also not applicable in case of new regime. It is applicable in old regime. It is allowable in old regime. This is the difference. This is a minus point of new regime, that all these deductions are inadmissible in new regime. Then the main difference is regarding rebate under section 87A. Basically, most of the persons think that there is the basic exemption in income up to 12 lakhs. This is not the case. The deduction under section 87A is allowable at the rate of up to 60,000 for new regime. 60,000 income tax is payable on the income of rupees 12 lakhs. In this way, on the calculation, on the basis of calculation of this tax amount, 12 lakh income is not liable for any tax. The tax payable on 12 lakh income is exempt because the deduction under section, rebate under section 87A is allowable up to rupees 60,000. Here, there is another advantage. Suppose a person has income of rupees 12 lakh 10,000. So here in this case, the income is exceeding only rupees 10,000. But he is supposed to calculate his tax from 4 lakhs. In that case, there is a marginal relief which has been provided in the Act. And marginal relief says that the amount of total tax shall never exceed the amount by which the income is exceeding rupees 12 lakh. Here in this case, your income 12 lakh 10,000. Your income is exceeding only by 10,000. Am I clear? Your income is exceeding only rupees 10,000. So you are supposed to pay maximum tax of 10,000 only. Thereafter, you have to calculate 4% higher education cess, and then it is payable by the taxpayer. So this is the rebate under section 87A, and that rebate is also available in the old regime, but in old regime it is allowable to the extent of 12,500 only. Instead of 60,000, it is allowable only 12,500. So this is the difference under section 87A for the old regime and new regime. Next topic, as I was allotted, was the advance tax. I think, Rashmi Babi, there is any query regarding this new regime and old regime?
Let me ask. If anybody want to ask anything about this old regime and new regime tax, or is it clear?
I think marginal relief is clear. What is marginal relief?
Sonal?
Yeah. No, I don't have to say it is clear. I think nobody has a query. There is no raise
Okay.
of hand.
Okay. Mm, Umesh bhai, right now there is no query, so you can
Okay.
continue.
Okay.
Yes.
So
Okay.
next topic, advance tax. Under income tax law, every person is required to pay the tax in advance under certain circumstances. Section 207 prescribes that tax shall be payable in advance in accordance with Section 208 to 290. Section 208 says that if the amount of total tax payable by a taxpayer is in excess of rupees 10,000, he is required to pay the tax in advance. Before that, I would like to mention that senior citizens having no income from business or profession, under 5 heads, I have already told you there are 5 heads of income. If the income under the head business or profession is nil, in case of senior citizens, they are not required to pay any amount of tax in advance. The provisions for advance tax are not applicable on senior citizens in case they have no income from business or profession. It should be very clear. Now,
Yes.
Section 208 says that if the total amount of tax due is in excess of rupees 10,000, the person is required to pay it in advance. Section 209 is in connection with the computation of advance tax. Regarding computation of advance tax, it has been provided in the Act that a taxpayer is required to estimate its income first under all the heads of the income, then work out the tax on that income. In that tax amount, the amount of TDS or TCS, which is likely to be deducted during the year, that shall be deducted. And the balance amount, that is the net amount of advance tax payable by the taxpayer in 4 installments. These 4 installments are due on, first installment is due on or before 15th of June, and on or before 15th of June, out of total amount of advance tax, 15% amount is required to be paid. Out of 100, suppose 100 rupees is to be paid as advance tax. So up to 15th of June, 15 rupees is to be paid as advance tax. Next installment shall be on 15th of September. Up to that amount, up to that date, total 45% of the income tax should be paid. 15% up to 15 June, इसका मतलब balance 30% has to be paid before 15th of September. Then next installment is 15th of December, and up to that date, 75% of the total advance tax should be paid, and the balance amount is to be paid up to 15th of March. Total 100% amount should be paid up to 15th of March. So this is the scenario under which the advance tax is liable to be paid, how it shall be calculated, and under what circumstances, at what time, at what percentage it is required to be deposited. This is in section 211. Then I would like to mention the defaults, the consequences of defaults in connection with non-payment of advance tax. There are 2 sections in Income Tax Act. Section 234B. The 234B says that if a person liable to pay advance tax either fails to pay the advance tax, or total amount of advance tax paid by him is less than 90% of the assessed tax. They have defined what is assessed tax. Assessed tax means the total amount of tax finally assessed by the department on your assessment, whether it is under section 143(1)(a) or it is under section 143(3). Finally, tax assessed by the department shall be the assessed tax. And if the total amount of advance tax paid by you, it falls short by 10%, then the person is required to pay interest under section 234B at the rate of 12% per annum. Another section is regarding deferment of advance tax. Suppose a person was required to pay up to 15th of September 45% of tax, and he did not pay the tax up to that quantum. Then he is required to pay the interest under section 234C at the rate of 12% per annum. So this is the default in connection with deferment of advance tax. So these are two sections in connection with the payment of interest on.
But please explain one more point, that
Yeah.
what is the benefit of advance tax other than to save yourself from this default?
No, first of
What
all,
is the benefit?
First of all, this is the compliance of law. You have to
Okay.
ensure the compliance of law. If I ask what is the benefit of paying the income tax, this is just a compliance of law, first of all. And secondly, there is also a monetary benefit. You shall be entitled for interest if the advance tax is paid in excess.
Oh, thank you.
Department will pay you interest on that
Okay.
if the advance tax is paid in excess.
Yes, means you are taking interest from government.
Yeah, of course.
Okay.
Of course. That is 9%. So that is very, very handsome amount. Even better than bank.
Okay.
So this is the benefit. First benefit, I think it is compliance oriented. And second is monetary benefit. No one wants to pay advance tax in excess what is due. But in case if it is paid in excess, then the person shall be entitled for interest also. So I think.
And if somebody paid extra advance tax,
Yeah.
will it be returnable?
Of course.
Okay.
Of course. Advance tax.
It will not carry on for next tax. It will be returned.
So many people, they don't know what is the amount of prepaid taxes in their case. Suppose they purchased a car. TCS is deducted. They calculated that TCS as cost of their car. They are not aware that this amount has been deducted as TCS, and this is refundable.
Okay.
When they approach their professional, only then they come to know that this is the amount which has been already paid by me as advance tax, and it is refundable.
Okay.
So,
Sir,
yeah.
Sir, in practical cases where income is unpredictable, for example, in small businesses or freelancing, how can one avoid 243B interest?
You have to estimate income as far as law is concerned.
Sir, like this estimation, how is it being done?
This is up to you. Ultimately, you have to estimate.
Okay.
Income tax department will not help you in this regard.
Okay, so that is on us, that how we have to estimate.
Of course.
And, okay.
Section 209. It nowhere says that you have to disclose the reasons how you have computed this much amount as your income of the current year. But on the other hand, department is safe. If the amount of income advance tax falls short of the assessed tax, you are liable to pay the interest.
Means whosoever is our income tax lawyer, he will explain us how much income advance tax we should pay.
Yeah. For example, another.
If we are not able to assess our income ourselves.
I am citing you an example that capital gains. Suddenly, one
Yes.
sells one of its assets, and the income generates as a capital gain. In that case, this is a casual income, not a regular income. So in casual income, that person is required to make good its deficiency in that very installment which is due to be deposited next. If the person sells its property in January, he is required to pay and make the deficiency good in March. He has got an option.
Oh. Yes. Next.
Next is capital gain.
Oh.
This is very vast topic, and I think even a day is not sufficient to discuss capital gains. It is so exhaustive, but I have tried to explain it in a very short manner, but tried to cover all the aspects of this head. Capital gain is one of the heads of the income. Out of 5 heads, capital gain is one of the heads. Section 45 is the charging section of capital gains. Section 45 says any profit or gain arising from the transfer of a capital asset shall be subjected to income tax from the head capital gains. So, in section 45, there are 2 words which have got very much importance, are transfer and capital asset. 2 words are very important.
Come here. I want to hug you.
One is transfer and second is capital asset.
That's, something random mama put in daddy's room and daddy stuffed it. Those are elephants, Zoya. They look nice.
Just a minute, sir. I'll mute everyone.
I think
Sonal,
Mike
Yeah.
is on.
Sonal, we need to mute everyone.
Please.
Yeah, I'm muting all.
Yeah. Thank you. Go ahead, sir. So,
Umesh ji,
sir, you're also muted. Kindly unmute yourself, sir.
we have muted everyone.
Now, I am audible?
Yes.
Yes.
In section 45, 2 words have got importance. They are transfer and capital asset. So when capital asset is transferred, only then the capital gain comes into picture. So what is capital asset? Capital asset is defined under section 2, subsection 14 of the Income Tax Act. And as per its definition, capital asset means property, securities, shares, jewelry, painting, etc. Some assets has been excluded from the scope of capital asset. Everyone knows that agricultural land on its sale, capital gain is not leviable. So agricultural land is excluded from the scope of capital asset. Personal effects, example, wearing apparels, furnitures, etc., they are also excluded from the scope of capital asset. Gold bond, special bearer bond, gold deposit bonds, they are also excluded from the scope of capital asset. Now I want to make it clear that agricultural land, all agricultural land are not capital asset. This is not so. Agricultural land have been divided in three categories. And whether an agricultural land shall be deemed to be a capital asset or not, it depends upon its location. If the agricultural land is located within aerial distance of 2 kilometers from a municipal limit, having population more than 10,000 and less than 1 lakh. If it is situated within an aerial distance of 2 kilometers from the municipal limit, having population of more than 10,000 and less than 1 lakh, shall not be treated as an agricultural land, although agricultural operations are being performed on it. Second category is within aerial distance of 6 kilometers from the municipal limit, having population of less than 1 lakh, but more than 1 lakh and less than 10 lakhs. In this case also, the land situated within aerial distance of 6 kilometers shall not be treated as an agricultural land. And third category is aerial distance of 8 kilometers from the municipal limit of the cities having population of more than 10 lakhs. So in this way, these agricultural lands have been divided in three categories, and under these circumstances, few lands, although agricultural operations are being performed, although agricultural operations are being performed on these lands, even then, these lands shall not be treated as an agricultural land. This definition, section 214, it shall also be useful in case of section 194. When I will treat the TDS matter, then also we will discuss it again. So here, capital asset, as I have pointed out, defined under section 214, and these agricultural lands are not treated as agricultural land, shall be treated as capital asset and shall be subjected to capital gain on its sale. The next important topic was transfer. As we know, in general and common parlance, transfer means transfer of property for valuable consideration. This is transfer. Transfer of property for any valuable consideration. But Income Tax Act, this transfer in itself has not been defined. Only under definition, it has been pointed out that transfer includes, transfer has nowhere defined. Transfer includes sale, exchange, relinquishment, compulsory acquisition of assets, and conversion of assets to stock in trade. These are examples of transfer which has been included in the term transfer. Sale, of course, it is transfer. Exchange of property, it is also transfer. Relinquishment of property, of rights, if someone relinquishes its right in any property, it amounts to transfer as far as Income Tax Act is concerned. Now, one thing I want to make it clear, transfer of assets to stock in trade. What does it mean? For example, if someone has jewelry, jewelry is his personal property, personal assets, and he starts a jewelry shop also. He converts his jewelry in his stock in trade. Then this conversion of jewelry from capital asset to stock in trade, this is transfer. And that person is required to pay the tax as income from capital gains on this transfer if it is due or it works out to be due. Then another section, in section 47 of the Income Tax Act, certain transactions have been excluded from the definition of transfer. Although there are transfer, but these transfers have not been treated as transfer in capital gains. Section 45 says on allocation of properties in partition of an HUF. An HUF, if the HUF is partitioned, the properties are divided amongst its co-parceners. Then this allocation of properties amongst the co-parceners shall not be treated as transfer. So partition of the HUF and partition of the properties of HUF shall not be treated as transfer. If someone receives any property under gift or will, under gift or will, if anyone receives any property, it shall not be treated as transfer. If someone donates his property to a trust with the condition that this transfer is irrevocable, then the irrevocable transfer to the trust is also not covered under the term transfer and shall not be subjected to capital. So these are basically basic fundamentals of capital assets and transfer. Because only these two requirements are there, transfer of capital asset, only then capital gain arises. So asset should be a capital asset and there must be a transfer of that capital asset. If both the conditions are coexistent, only then capital gain arises. Next thing is, there are two types of capital gain under the income tax law. One is short-term capital gain and another is long-term capital gain. Short-term capital gain arises where the short-term capital asset is transferred. Whether a capital gain is a short-term capital gain or it is a long-term capital gain, it depends upon the duration or the holding period of the capital asset in the hands of the owner. If the capital asset is owned for more than the prescribed time, it shall be treated long-term capital gain, long-term capital asset. So short-term capital asset has been defined under section 242A. 242 capital A of the Income Tax Act, short-term capital asset has been defined. In this definition, there are two conditions. First is less than 12 months. Under this, listed securities, shares of listed company and equity-oriented funds. If these assets are held for a period of less than 12 months, these assets shall be treated as a short-term capital asset. And the capital gain arises on the sale of these assets shall be treated as short-term capital gain. All these things are interrelated. Capital asset should be a short-term capital asset. Its sale shall be considered as a short-term capital gain and accordingly tax shall be paid. Then long-term capital asset. Long-term capital asset has been defined under section 2 29AA of the Income Tax Act. And in this definition, only it has been provided that the assets other than short-term capital asset shall be treated as long-term capital asset. Long-term capital asset has not been defined in the Act. Only this has been provided that assets other than short-term capital asset shall be treated as long-term capital asset. Rate of taxes on short-term capital asset and long-term capital asset both are different. Section 111A, the rate of capital gain tax on short-term capital asset has been provided. Under this, short-term equity shares, units of equity fund, etc., if they are short-term capital asset, the rate of tax is 20%. And all other short-term capital asset, for example, land, building, property, all these short-term capital assets, the short-term capital gain shall be added to the normal income of the assessee and tax shall be payable accordingly, as per slab of that income. So basically, this is the difference between short-term capital asset of the general in nature, like property and others. The amount of capital gain shall be added to your normal income. And in case of short-term equity shares, etc., units of equity funds, the amount at the rate of 20%, at the flat rate of 20%, it shall be payable by the taxpayer. Now, section 112A. 112A is in connection with the rate of tax payable on long-term capital. Long-term capital gains, if the asset is equity shares and the security transaction tax was paid at the purchase as well as on sale, then the rate of tax shall be 12.5%. And in this case, a deduction of 1,25,000 shall also be admissible. Suppose your capital gain works out at rupees 2,50,000. Out of that 2,50,000, you shall be entitled to claim a deduction under section 112A amounting to rupees 1,25,000. And on balance of 1,25,000, you are required to pay tax at the rate of 12.5% only. So this is the rate of tax on this, and rest of the other properties. On rest of the other properties, only 12.5% tax is required to be paid without any benefit of taxation, indexation. Here I want to make it clear that up to 23rd of July 2024, when the budget for financial year 24-25 was introduced in the Lok Sabha, the benefit of indexation was abolished. But instead of taxing the amount of capital gain at the rate of 20%, it was reduced to 12.5% only. So 12.5% rate जो है, वो that is applicable without indexation. Benefit of indexation has not been available. Thereafter, an amendment was made to the Income Tax Act, and in that amendment, it was clarified that on the basis of indexation, tax shall be calculated at the rate of 20%. Without indexation, tax shall be calculated at 12.5%. The amount shall be payable by the taxpayer, whichever is lower in these two figures. If the amount with indexation at the rate of 20% is higher, and the amount without indexation at the rate of 12.5% is lower, then the amount 12.5% shall be payable by the assessors. So It was the benefit which was provided later on to the SSC.
Umesh bhai,
Haji.
I'm interrupting you. Is there is hardly only 25 to 30 minutes are left for our session.
Yeah.
I want you to emphasize on what is the benefit for senior citizens? How can we save tax? What should be the smart planning
I think in
of
capital gain,
taxation?
I will take only 5 minutes.
Okay.
5 minutes. Let
Then
me
please,
confirm capital gain. Thereafter, we will take up all the queries.
no, I just want you to cover what is the benefit, what are the beneficiary schemes for senior citizens and women, any tax saving technique for women, what papers we should compile to pay our tax easily, to calculate our tax easily. This you should also cover.
Basically, there is no difference, no taxation, no extra benefit is provided to women. All taxpayers are at par. As far as senior citizens are concerned, under new regime, there is no difference between in slab between senior citizens and normal citizens. Below the 60 years of the age and above the 60 years of age, as far as new regime is concerned, there is no difference. But as far as old regime is concerned, the basic exemption for normal citizens below 60 years of age is 2.5 lakhs, and for senior citizens, it is 3 lakhs.
So what do you recommend? Senior citizens should opt for old regime.
We cannot generalize it.
Okay.
It depends upon each and every case. If a person is having loan on house property, he is paying interest on that loan, he is repaying the loan, then the scenario is different. I have to work out both the cases. Under old regime, what is the amount of tax payable? Under new regime, what is the amount of tax payable? Only then we will work out what is beneficial to you, whether old regime is beneficial to you or new regime is beneficial to you.
Okay.
We cannot generalize it.
Okay. Now you please continue.
Yeah. So I was explaining the income under capital gains. Now, in very short, I want to explain that in certain cases, as I have told you, on partition of HUF, no transfer is involved. Under a gift or will, no transfer is involved. On dissolution of firm, when assets is transferred to partners, no transfer is involved. But ultimately, the recipient of these assets, when they sell these properties, then what shall be the cost of acquisition in their hands? The Act has taken care of that situation also. In Section 45, it has been provided that in case the cost of acquisition in case of previous owner, that cost shall be deemed to be the cost of acquisition in successor also. Suppose I am getting any property under gift to my donor, the cost which was prevalent on my donor, that cost shall also be the cost of acquisition in my case. And accordingly, the capital gain shall be worked out. Another issue is the capital gain on depreciable assets. Certain assets are depreciable assets. Like you are selling your car, you have claimed depreciation on your car. for last 5 years or last 10 years, and now you are selling it. For depreciation, for depreciable assets, Section 50 of the Income Tax Act, it says the value of the car shall be the value WDV, written down value of that car on first day of the previous year. On 1st of April, its WDV shall be the cost of acquisition, and the amount of capital gain shall be treated as short-term capital gain, and it shall be added directly to your income without any special rate of tax. Whatever may be the rate of tax on your income, according to the slab, it shall be payable by you. The difference of WDV and the actual sale price shall be treated as a short-term capital gain. So this is the case of depreciable assets. Now there are certain deductions which can be claimed on income from capital gains. One of them is Section 54. Section 54 says that when capital gain arises from the transfer of sale of building or land appertinent thereto, then the assessee, if before 1 year of that transfer or after 2 years of a transfer, it purchases a new house, or within a period of 3 years, it purchases a new house, then capital gain shall not be charged in that case if the value of the new asset is equal to or higher than the sale price of the old asset. And if the value of the new asset is less than the sale price of the new asset, it shall be reduced proportionately. So this is the benefit of Section 54. Under Section 54, if the capital gain arises from the transfer of a house property and a new house property is purchased within 2 years or constructed within 3 years. Here, one thing is very much important, that this benefit can be availed only once. Once the taxpayer has availed this benefit, he cannot claim it in any subsequent years. Second thing is, very important thing is, that assessee is required to construct a new house within 3 years. Suppose the old asset was sold during financial year 25-26. The return for financial year 25-26 is due either up to July 26 or up to September, as the case may be, whether it is audited or non-audited. It is July or September. Then if the assessee fails to purchase the new house up to July, the balance amount, the amount of sale proceeds, has to be deposited in a capital gain account scheme to be opened in bank separately. And that amount shall be deposited in that amount before the furnishing of the return. And that amount shall be released only when the new asset is purchased by the taxpayer. At the time of its purchase, that amount can be availed, that amount can be released from the bank and shall be paid to the seller of the new asset. So this is the scheme of Section 54. Another section, Section 54B. Section 54B says that where agricultural land, as I have told you in connection with capital asset, I have told you 3 types of agricultural land. The one situated within aerial distance of 2 kilometers, within aerial distance of 6 kilometers, and within aerial distance of 8 kilometers. These agricultural lands shall not be treated as an agricultural land. So in such cases, if these lands are sold, agricultural land being used as agricultural land for last 2 years. The capital gain arises, and within 2 years, any other agricultural land is purchased, then the capital gain shall be adjusted accordingly. If the cost of the new land is higher than the sale price of the old land, no capital gain. If the cost of the new agricultural land is lesser than the old one, then the sale price of the old one shall be reduced accordingly in proportionate of new asset. So this is section 54B. Now 54C is much easier. It is regarding the purchase of bonds. Two types of bonds are very popular today: National Highway Authority of India and Rural Electrification Bond. These two bonds are available in the market, and these bonds up to 50 lakhs can be purchased. The amount of capital gain has to be invested in these bonds. There is a difference between section 54B, 54 and 54EC, because under section 54 and 54B, the wholesale proceeds has to be invested. But in 54EC, only amount of capital gain has to be invested. Amount of capital gain means after deducting the cost of acquisition. Only the amount of capital gain has to be invested in bonds. So these bonds up to 50 lakhs can be purchased, and with the condition that these bonds shall not be encashed within a span of 5 years. No loan can be raised on these bonds, and in case of raising any loan, it shall be deemed as if these bonds have been encashed. And thereafter, in that scenario, in the year of its encashment, the assessee shall be payable the capital gain as if the capital asset was transferred in that year also. So this is the scheme of section 54EC. Now another section is section 54F. Section 54F says okay, transfer of any long-term capital asset not being a house. Section 54B was in connection of transfer of capital asset being a residential house. Section 54F says transfer of any capital asset other than a residential house. Then after its sale, other than residential house, it can be plot, it can be shop, it can be any other asset other than residential house, and the assessee has within 1 year before or 2 years after purchases any new house, or within 3 years purchases any construct any new house, then the capital gain shall not be charged. In that case, if the amount of new asset is higher than the sale price, no capital gain. If the amount of new asset is lesser than the sale price, it shall be reduced proportionately. So these are the deductions in capital gains. This is the whole scenario of capital gain, its taxation, type of capital gain, rate of tax, and deductions. I think everything in capital gain in nutshell I have tried to cover. Any query?
Yes.
In this regard, it is welcome.
Sir, if a government acquires my property, then how is the capital gain tax is any exemption is given, or is it calculated normally?
Please repeat.
Sir, if government
you are not
Sir,
audible.
if government acquires my property.
Yeah. Transfer covers acquisition of properties. I have told earlier that transfer section 247 transfer has been defined, and under this head acquisition of properties is covered. It is a transfer, and the amount of compensation received by the person shall be treated to be the sale value of that property. Is it clear?
Okay. Yes, sir.
The amount of received on acquisition. There is another provision that if you file a litigation in connection with the cost of acquisition, and subsequently from High Court or from Supreme Court, you are getting a higher amount of compensation, then the amount received in addition to the original compensation account, that amount shall also be treated as the amount of capital gain, and in the year of receipt, it shall be liable to tax. It is clear?
Yes, sir. Sir, also one thing that the difference between short-term capital gain and the long-term capital gain asset. Sir, the specific date, does it affect it, or it is the period of years will only affect?
The burden lies upon you to discharge it. You have to prove that the period of holding period in case of long-term capital gain was more than 24 months. Suppose you are selling a property, you purchase that property, and you are having purchase deed of that property. So by that purchase deed, you can prove it that the holding period of this property is more than 24 months. So it is the
Sir,
burden.
even if it exceeds by 1 day, then also it will be considered in long-term capital gain asset.
There is no relaxation of number of days. If it is in excess of 1 day, so it is long term, and it is short by 1 day, it is short term.
Uh,
You just wait for your sale deed to be
okay,
executed.
means like that.
Next topic which I was allotted is the TDS. TDS is the tax deduction at source. On certain payments, the payee is required to deduct the tax. He is required to deposit it within the prescribed time, to upload its annual return, quarterly return. There is no annual return, I'm sorry, quarterly return. And the recipient of that amount from which the amount was deducted at tax, he is entitled to claim the benefit of that amount as its advance tax. Section 192 to 194T are the main sections of TDS, how is to be deducted, what is the rate of deduction. Under the new act, all these different sections, section 194A, 194B, 194BA, 194C, now they have summarized under a schedule. So you will not get different sections, rather we will get a schedule, and under this schedule we will get type of deduction, rate of deduction, conditions of deduction, etc. So as far as at present the act is concerned, section 192 is in connection with salary. If anyone pays salary to its employee, the TDS is deductible. It is payable by any person, and the amount of salary, the normal rate of income tax shall be worked out, and it shall be deducted accordingly on the monthly basis or on the basis of quarter or annual basis, whatever it is. Section 192 in connection with salary. 193, interest on securities. Interest on securities is deductible at the rate of 10%. Here NSC have been included. Interest on NSC, on its interest, TDS is not deductible. Section 194 on dividends. When the company pays dividends, TDS is deductible at the rate of 10%. And the amount of dividend should be in excess of 5,000. If the amount of dividend is less than 5,000, TDS is not deductible. Section 194A, interest other than interest on securities. Securities 193. 194A, interest other than interest on securities at the rate of 10%. Any person is required to deduct the tax. Even individual persons are also liable to deduct the tax, and only those individuals are liable to deduct the tax whose accounts are required to be audited under Section 44AB of the Income Tax Act, meaning thereby if their total sales are in excess of 1 crore, or in case of professionals, their total professional receipts are in excess of 50 lakhs. Only then they are required to deduct the tax. If the interest is paid to bank, cooperative society, it is not deductible. No TDS is required to be deducted if the interest is being paid to the bank. If the interest is paid by the bank and interest is being paid to the senior citizens, up to 50,000, TDS is not required to be deducted. And in case of general taxpayer, the limit is 40,000. So in case if the bank pays interest to a general citizen, to a person below 60 years of age, up to 40,000, no TDS is required to be deducted. And in case of senior citizen, if the amount is 50,000, then no TDS is required to be deducted. If the payee is other than bank, cooperative society and post office, the threshold limit is only 5,000. Meaning thereby if the amount of interest is less than 5,000, no TDS is deductible, and if the interest is more than 5,000, TDS is deductible at the rate of 10%. Then next step, 194 capital B, winning from lottery and puzzles. Winning from lottery and puzzles, TDS is deductible at the rate of 30%. Here also, no threshold limit is prescribed, because without any threshold limit, winning from lottery and puzzles is taxable at the maximum marginal rate of 30%. So I think that is the reason behind fixing it at 30% TDS, because this income is also taxable at the rate of 30%. Then 194BA, winning from online games. Winning from online games is also having no threshold limit. TDS is deductible at the rate of 30%. In the same manner, winning from horse races, 194BB. Here, 10,000 rupees is the threshold limit. If the amount of winning from the horse race is below 10,000, no TDS is deductible. And if the amount is in excess of 10,000, TDS at the rate of 30% is deductible. Next, Section 194C, payment to contractors. If the payment is made to any contractor and the recipient is an individual or HUF, the TDS is deductible at the rate of 1%, and if the deductee is firm or company, the TDS is deductible at the rate of 2%. In this case also, the threshold limit 30% individual transaction or rupees 1 lakh in whole year. Suppose one person pays 20,000 in 6 transactions. So up to 4 transactions, no TDS shall be deductible. But in 5th transaction of 50,000, the amount shall be 1 lakh. So in that amount, he is required to deduct the TDS on whole amount of rupees 1 lakh, because the maximum threshold limit in a year is rupees 1 lakh. In this case, freight is also covered. On freight, if the person furnishes a declaration that he owns less than 10 goods carriage, then TDS is not deductible. Not very much importance to us. Next, income from commission or brokerage. If a person pays any amount as commission or brokerage, TDS is deductible under section 194H at the rate of 2%. Here, the threshold limit of 15,000 is prescribed. Under section 194H, all persons are covered, including individuals having the liability to get their accounts audited. Section 194I, on plant and machinery, on rent paid on plant and machinery at the rate of 2%, and on land and building at the rate of 10%. Under section 194I, all persons other than individual are covered. And for individuals, there is a separate section of 194IB. I don't think any relevance that for individuals, they have generated another section 194IB, and other than individual, 194I. The contents of 194I and 194IB are the same. It could have been under the same section. So that is why in old law, these are all redundant sections which have been abolished in new law. 194IA, transfer of property. This is very important. On purchase of immovable property of value exceeding rupees 50 lakh, every purchaser is required to deduct the tax at the rate of 1%. Here, agricultural land is also excluded. And the agricultural land should be the same agricultural land as defined as capital asset in section 214. As we have discussed earlier, 3 types of land, 2 kilometers, 6 kilometers, 8 kilometers, the same definition applies here. And if the land is covered by those definitions, TDS is deductible. And if the land is situated out of that aerial distance, TDS is not deductible. Then 194J, TDS on professional services. If any person, a professional, receive fees exceeding rupees 30,000, the payer is required to deduct tax at the rate of 2%. Here also, every person is required to deduct the tax, even including individuals who are required to get their accounts audited. Then 194N, payment on cash withdrawals. Here, banking companies and post offices, amount exceeding rupees 1 crore. If a person withdraws 1 crore in cash from any bank or any post office, bank is required to deduct tax at the rate of 2%. Here, there is another clause in which it has been provided that if the person does not furnish its income tax return for the last 3 consecutive years, the ceiling amount of 1 crore shall be reduced to 20 lakhs and the amount of TDS shall be from 2% to 5%. It means the basic threshold limit has been reduced from 1 crore to 20 lakhs and the rate of TDS has been increased from 2% to 5%. Then 194R. 194R was introduced in 2024. This is the TDS of benefit or perquisites. Benefit or perquisites provided to any customer, to any person by the business or professionals. In this case, it has been provided that TDS shall be deducted at the rate of 10% if the amount of perquisite, whether in cash or in kind, is in excess of 20,000. If the value of the asset being gifted in kind is more than 20,000, the provisions of 194R are applicable. And in this case, the person, the payer, has to ensure the TDS is to be deducted, is to be paid by the recipient in this case, because the amount is not being in cash, is not being gifted in cash. It is in kind. So it is the duty of the payer to ensure that the TDS is deposited by the recipient. So this is the duty of the payer of that gifted amount. Then 194T, it was introduced recently in 2025. In this head, on payment of salary, interest, commission, bonus by the firm to its partners. Till 2025, any payment by the firm to the partners in the form of interest, commission, bonus. No TDS provisions were applicable, but with effect from 1/4/25. For this current financial year, this is applicable, and if the amount of bonus, commission, salary, anything, whatever you name it, if it exceeds 20,000, TDS at the rate of 10% is deductible. So these are the provisions of TDS. 194T is the last section in connection with the deduction of tax. Then another topic is tax collection at source. Like TDS.
I have a query.
Yeah.
From I think last year, if we get rent also, we have to pay some. The tenant has to cut some TDS before they give. Previously,
how much
they
rent?
didn't.
How much rent was given?
Rent is, I think, let's say around 65,000 per month.
Yeah. No, TDS is payable if the person who is paying the rent, if he is an individual.
Yeah.
He is an individual.
Yeah, both the person paying both the owner and the tenant are individuals.
They are both are individual. The person who is paying the rent, he is carrying on any business?
He has his own business, but not at the premises. It's a residential flat.
It is the
salaried, I think. Yeah, salaried person paying a rent of around.
Salaried person is not required to deduct the TDS because only those individuals whose accounts are required to be audited, only those individuals are required to deduct the TDS.
Even if it's for a residential apartment, they have to deduct.
This is separate issue. This is separate issue.
Okay.
First, we have to ascertain whether the individual who is paying the rent, whether he is under an obligation to get his accounts audited or not. If he is not required to get his accounts audited, he is not required to deduct any tax.
Okay.
And besides that, this is a residential property. Although I don't think that there is any exclusion of residential property from the scope of TDS. But the primary thing is the payee. He is not an individual liable to audit.
Yeah.
So then person is
Correct.
when he is not liable to get his accounts audited, he is not liable to deduct any TDS.
Okay. Okay. Because his CA asked him to, so he's deducted. This is last assessment here, so I was just
Yeah.
confirming that it's required.
You please convey him. You please.
Yes,
convey.
yes, I'll
You
note
are-
that. Thank you.
You are simply a salaried person. You are not required to get your accounts audited. Then why you are deducting TDS? You are not required to pay any. You are not required to deduct any TDS.
Right. Yeah.
Yeah.
Thank you, sir. I'll check.
Excuse me, sir.
Yeah.
Sir, if a firm is paying its partners in equity shares, for example, in assets, sir, then also the TDS will be deducted or not?
No, firm is paying equity shares
Yes, sir.
to
So
its
rather
partners.
than interest or commission, the firm is paying its partners in equity shares.
No, firm does not have any share of its own. Company has shares. Company. Firm is not a company.
Yes, sir. A company.
Company is. No, 194T is not applicable on companies. 194T is applicable only on firms.
Sir, but if a firm is paying its partners in any of the asset,
No, firm is paying to its partners anything in lieu of commission or salary or bonus, then on its value the TDS is deductible. Okay.
So.
So I was discussing tax collection at source.
Umesh
Section-
bhai, let me ask Sonal how much time is left in this session.
Yes, I think we just have a few minutes left.
Yes.
Yeah, so maybe we should take up the questions.
Yeah.
Umesh bhai, is there any very important thing is left?
Only one thing is left, which I think it is important to all of us.
Please take.
Yeah, this is section 285B capital A. It is some certain financial transactions which are reportable. You have asked earlier that what shall be the consequences of cash and credit card payments. So in connection with certain payments, section 285BA have notified certain transactions as SFT, special financial significant financial transactions. Under this, large withdrawals or deposits exceeding rupees 50 lakhs in a bank, in a current account. In any bank, in its current account, if rupees 50 lakhs are deposited or withdrawals, then the bank is required to report this amount to the income tax authorities. Next, 10 lakh rupees FD or deposit in saving bank account. If anyone purchases FD of rupees 10 lakh or more, or deposits 10 lakh rupees in cash in its bank account, in its saving bank account, not current account, in its saving bank account, then bank is required to report this fact to the income tax department. Cash / credit card payment exceeding rupees 1 lakh. If you pay rupees 1 lakh or more through your cash or credit card in a year, the concerned company will report this amount to the income tax department. Purchase of immovable property exceeding rupees 30 lakh. If you purchase any property exceeding rupees 30 lakh in a year, the sub-registrar is required to report this matter to the income tax department. Cash payment exceeding rupees 2 lakh for any single purchase. For example, if you purchase any jewelry exceeding rupees 2 lakh in a single transaction, then the jeweler will ask your permanent account number, and that amount, that transaction shall be reported to income tax department. And all these transactions can be visualized from your AIS, annual information statement, or TIS. These are all visible on your AIS, TIS. So this is my advice to all of you, that first of all, before filing your return, please go through your AIS, TIS. Please ascertain whether there is any cash or credit card entries reported in this AIS, TIS. And if it is, then please adjust all your withdrawals in your capital account according to the sum shown as amount spent through cash or credit card. Please ensure if you have purchased any property, this property has been properly accounted for or not. All these informations which are available on AIS, which are available on TIS, has been properly reconciled with your information being furnished in your return. This is very important.
So can I ask you a question?
Yeah.
Yeah. I was told that for EV cars, you get a 40%, what is it? The first year, the 40%, I've forgotten the
Benefit.
term now, sorry.
Subsidy.
Yeah,
Benefit.
tax deduction. Tax deduction. Is
Prestige.
it
40% tax deduction from which amount?
from the car, the price of the vehicle? Is that true?
No, for the car of the vehicle. देखिए, if the car is being used for your business purposes, then
Ah.
depreciation is allowable. And on
But
car,
40%? Is it really
no,
40%?
no,
Ah.
15%.
For
No,
EV
no,
cars,
wait,
I was
wait.
told it's 40%.
हाँ, for EV पे क्या है?
EV पे है section 80 EV.
हाँ,
If the interest paid on EV cards is more than
नहीं
1
depreciation EV पे.
40.
हाँ, EV पे it is available on EV.
For 40%.
Yeah.
Okay, fine.
Normal car
because-
it is 15%.
Okay.
And on electric vehicle it is 40%. And at present 40% is the maximum permissible rate of depreciation. Earlier it used to be 60%, but as on today, it is maximum 40%.
40% for the first year, and how about the
No.
subsequent years? Sir?
40% for the first year, and
2 and 3.
then on WDB 40%.
Okay.
Suppose your car is costing 10 lakhs. You will get depreciation at the rate of 40%.
Book value.
Next year you shall be entitled to claim depreciation on 6 lakh. Because
Okay.
6 lakh will be the WDB of that car.
Okay, fine. Thank you, sir. Thank you so much.
So this AI, the annual information statement, from where can we as individuals download it?
First you have to log in your permanent account number,
Yeah.
and then after you can download it from the site.
Okay.
So, any queries? Any other queries coming from anyone?
Yeah.
I don't
Sonal,
think
if there are no more queries, maybe I'll request you to give the vote of thanks, please.
Dharia, Anything else you want to know? Sure. Dharya.
Dhairya.
Yeah.
No, ma'am, it's all good. I'm Ridhima.
Okay.
Nice to
Actually,
see, nice to hear you
Dhairya.
asking so many questions there. It really gives us so much of
Yeah.
understanding. Thank you so much.
Ma'am, let me
Yeah.
introduce her. She is my granddaughter.
Oh, okay,
Oh,
okay.
how nice.
How sweet. Okay.
Very nice.
Okay, that's wonderful. Thank you.
Nice. Thank you. So,
So thank you
it
for
was,
providing me an opportunity to share my views with this knowledgeable gathering.
Thank you.
I'm
Thank you so much,
yeah,
sir.
I'm
and
happy.
it was, we are truly blessed. Today is Saraswati, I mean Vasant Panchami, and it's I would say it is a blessing that Ma Saraswati is giving us, imparting knowledge via you, and she is asking us, you should know how to handle Ma Lakshmi in the best way. So, very, very
Well
nice. It
said.
was really enlightening. And sir, I have to thank you. I mean, it was a non-stop more than 1.5 hour of session, which I don't see anybody has the capacity and the patience to deliver. I mean, so thoroughly and so nicely. I mean, you have really enlightened on so many topics. So many topics. In fact, I was wondering, अच्छा ऐसा भी topic होता है? Okay, okay. Oh, this is also a head. Nice, nice. Very enlightening.
Thank you.
Thank you so much, sir.
Thank
Yeah,
you.
in fact,
Terms that
yeah.
we can understand as laymen. That is, I think, very essential.
Yeah,
Thank you for
true,
that, sir.
Very true.
Yeah.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Thank
Thank you
you.
so much
Thank
for
you.
sparing your valuable time.
Okay.
Means
Thank
a
you.
lot. Yes.
Thanks. Varun.
Thank you, Rashmi. Thank you
Thank
so much for
Bye.
organizing this.
Thank you, Umesh bhai.
Thank you. Yes.
Thank you. Thank you.
And
Thank
all
you.
the
Thank you.
best to the
Sir,
little one.
sir, this meeting has been recorded and it will be shared
I
across all the uh,
I'm
organization
sorry for
portals. So
first 5 minutes was missed by me. It slipped, and then Shanti reminded me recording.
yeah,
Thankful to Shanti for
yes.
this. Thank you.
Thank you, sir. Thank you so much.
Highly
Bye-bye.
obliged. Highly obliged.
Thank
Bye.
you,
Bye.
Lakshmi, Sonal,
Yeah.
and Umesh bhai.
Hmm.
Thank
I
you.
think this is such a vast topic that one session was not enough for it.
Yeah.
Enough. I know.
True, true,
Whatever
true.
we
Very
could
true.
learn, whatever we could learn.
I tried to my best to concise it in a very short span of time to
Yes,
conclude in a very
yes,
short.
I know.
Yeah. Yeah.
Even then, it is very vast topic.
Yeah.
Even it was
Yes.
tough to compile it in short.
निश्चित रूप से.
Thank you, Umesh bhai.
Thank you.
Thank you.
Thank you. Thank you, sir. Thank you.
Bye.
Bye,
Bye.
ladies.
Bye.